Hi everyone, I'm going to be showing you guys exactly how I day trade today. It is Friday today, July 17th, and we're going to be day trading micro ES futures. So we're day trading the price of the S&P 500. I'm using regular trading hours on my chart, not extended trading hours. And we've only got one indicator on the chart. It's the VWAP line, and it is basically unadjusted. These are the settings. So with that being said, we're trading the New York session of micro ES, and that begins at 9:30 New York time. For me, it starts at 10:30 a.m. And I only start looking at the chart around 10:45 a.m. my local time because I like to wait for the first 3 5-minute candles to print and close so that I can draw a box over them from the highest wick out of those 3 candles to the lowest wick out of those 3 candles. And this box here, it forms what I like to call our opening range. The next thing that I like to do after this is I like to wait for price to break out and print and close a candle body either out of the top of the opening range or outside below the opening range. Today, it happens to happen on top of the opening range. When that happens, the first thing that I look for is what I call a continuation setup. So it's where price breaks out of the opening range, pulls back, then I wait for a confirmation candle and I would trade price as it's continuing upwards. But we never really got that today. I was expecting for it to happen here. It never occurred. And price continued to climb and climb and climb and climb outside of the opening range until it finally climbed 30 or more points outside of the opening range. And most likely, price was doing this to fill this fairly large gap that's been created here due to the regular trading hours, which is very common. Now, when price climbs 30 or more points above or below, in any case, the opening range, and we don't get a continuation setup, I'm immediately expecting a reversal, where I'm expecting price to run out of energy and for price to fall back down and return to either the VWAP line or even in some cases the opening range. So there are a couple things that I want to wait for before I enter a reversal trade. Price overall ends up coming about 47 points outside of the opening range. And the first thing I need to see is a sign of reversal. So a sign that price is potentially going to come back down. And I usually wait for at least 2 consecutive bearish candles in this case to the opposite side, which is the downside. So we get that right here. And then after that, I want to see price pull back. This one single bullish candle here serves as that pullback. A lot of times I like to see 2 consecutive bullish candles as well, but it doesn't always happen. In today's case, it didn't. And when I seen this one candle pull back here, I thought to myself, all right, well, I'm going to wait for either another additional bullish candle to pull back, or if I get a really strong, powerful confirmation candle, I'm probably going to enter it. And so immediately after this pullback bullish candle, I get a bearish engulfing candle, meaning it's larger than the most recent candle that's printed, to the downside. Very small top wick, fairly small bottom wick, a pretty full candle body. This candle right here was a good confirmation candle for me, so I went ahead and took a chance on a reversal short. Took my short setup, entered on the close of that confirmation candle. I pulled my stop loss up to the very top of where price got today, which was about 14.25 points. Took my stop loss, took my take profit, pulled it down to make it a 1 risk to reward ratio, which landed pretty perfectly because it landed just below the VWAP line, which is where price usually wants to reverse to. I'm always looking for 1 risk to reward ratio trades, and I'm always usually risking about 1% of my account per trade. And really no reason today to use risk management, although it did come close, and I'll explain. So once I was entered into this trade, price started to move in my direction, and then I got what's called an airborne candle, which is this bearish candle, and I'm going to just move this back here. So it's this bearish candle right here. It's a very neutral candle, body kind of condensed into the middle of the candle, very big wicks on top and bottom. And then following that candle, we get this candle right here. So you can see that it prints its body and its wicks inside of the take profit area and not touching or even entered the stop loss area. So it's kind of floating within the take profit area, and that's why I call it an airborne candle. And after we get a candle like this, if let's say I would have gotten a candle that would have printed up towards the bullish side and closed a candle body inside of the stop loss, I would have just exited the trade wherever that candle body would have closed at what I call a partial loss. And the following candle actually wicked up into the stop loss area, but before candle had a chance to close and print its candle body, it came back down into the take profit where I would end up getting the win. So came close to having to use risk management and exiting the trade early, but it didn't happen, and I walked out today with a win using a reversal short on micro ES. It's as simple as that, guys. Finished off the week strong with a win, and that's about it. I'll see you guys in the next one.